Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia Derivative and managed by LifeChamp. Today, we are very excited to be doing this futures webinar topic. Okay, our webinar today is titled Level Up Your Trading Portfolio with BMD Futures. All right, so welcome everyone to this session. My name is Shane Chu. I'm the moderator for this session. All right. Yes. Yeah. Hello, everyone. All right. So today we're going to study how do we trade Fcpo futures in crude palm oil, and how do we trade FKLI futures in FBM KLCI index. All right. There are different strategies when it comes to trading these two contracts. Today, we are going to examine how do we go about trading these two contracts profitably. Our speaker will share with us his secrets in trading these two futures products. All right. As usual, disclaimer, our webinar is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any listed securities here or derivative here. So if you decide to make any investment decision or any trading decisions, you're 100% responsible for all your trading risk. So allow me to briefly introduce our speaker today, and he is none other than Jin Hao. Now, Jin Hao himself is a position trader in the capital market, focused on stocks and futures. He is also the founder and chief master trainer of Street Finance. His signature program, Street Trader Intensive Program, teach people how to trade without monitoring and speculating in the market. He is also featured in Britishpedia Biography Encyclopedia, Successful People in Malaysia, the 3rd edition. So he's also featured in media such as City Plus FM, Borneo Post, Sinchiu on financial related topics. He spoke regularly for Bursa Malaysia and also other investment banks for the various topics. And of course, recently, Jin Hao was also known or featured by Bursa Malaysia as one of the, recognized futures trading speaker, okay, on Bursa Marketplace. So congratulations. And he's also a frequent speaker in university and colleges. So without further ado, let me hand over the session to Jin Hao. So Jin Hao, welcome to this session.
Hi, thank you, Shane, and welcome everyone to this webinar tonight, right? Brought to you by Bursa Malaysia and LifeChamp. So let me just share my screen first.
Yep, go ahead.
Okay, so
I like your new specs.
New spec. Actually, I have this spec for quite some time already, just that I didn't change it. All right.
All right.
Oh,
so over to you.
So can you see my slide already?
Yes, I can see your screen.
Okay,
and see your slide and your webcam function very well.
Okay, all right. So everything is good. Let's begin. All right. Okay. So welcome everyone to tonight's sessions titled Level Up Your Trading Portfolio with BMD Futures. My name is Jin Hao, and I'll be your speaker, right, for the next 1 hour and 1 hour 15 minutes, 1.5 hours, slightly less than 1.5 hours. All right. So, all right. So again, as usual, although Shen has already gone through that disclaimer, everything is just for educational purpose only, and you still have to be responsible for your own decisions when it comes to, executing any of the mentioned strategies and things along those lines. Okay, so again, this one, Shen has already introduced me. I'll just skip this. So the juice for tonight, all right? First, understand BMD futures contracts and how they can increase your trading income, all right? And I'm not going to sort of like explain in way too detail how futures works. I'm just straight up going to tell you FKLI and Fcpo, which are the most popular products under BMD futures. So in case you don't know what's BMD, it stands for Bursa Malaysia Derivatives. Okay, so again, that's the first thing. We're going to touch on the basics of the contracts. Then we're going to move on to how you can profit from a stock market downturn, okay, with FBM KLCI futures, which is known as FKLI. Okay, so I just want to ask you guys, okay, how many of you, okay, just give me a little bit of response, okay, at a scale of 1 to 10, Okay, 1 being like very lousy, very bearish, and 10 being the very bullish, okay, and 5 being a neutral, how would you rate the current Malaysia, the current Bursa stock market right now? Do you think that it's like very bearish, or do you think that it's very bullish, or do you think it's somewhere in the middle? Okay, somewhere in the middle, maybe towards the bearish side, or somewhere in the middle towards the bullish side. Okay, on a scale of 1 to 10. Right. So of course, tonight I'm not going to tell you about stock picks and things like that, but I'm going to tell you, at least I'm going to give you a solution on what you can do when the market is like really bad, or maybe when the market is like a mixed bag, whereby it's okay, it is good, not that great. You know that it can be great, but you do not have any great stock picks. Okay, so trading FKLI can be one of the things that you can do. And last but not least, what I'm going to cover tonight is how you can potentially generate a cash flow of trading income, okay, with CPO futures. All right, it's known as Fcpo. Okay, we all know that palm oil price has been really crazy. Okay, has been really crazy. So we're going to talk about that, how you can actually trade for cash flow of income. All right, so next. Okay, what are futures? So just brief through, a futures market is where participants can buy and sell futures contract. It's just like a stock market. Okay, it's like a supermarket of stocks. So futures market is where you can buy and sell futures contract. Is where the futures contracts are being transacted, right? And the futures contract is a standardized legal agreements to buy or sell an underlying assets like commodities or indexes, okay, at a predetermined price at a specific time, okay, in the future. Okay, you don't have to worry about this because I'm going to straight up give you all this information that you will need. All right. So first thing, okay, let's go through FKLI. So FKLI, the underlying is the KLCI, which is the index that everyone is familiar with. All right, the index that everyone is familiar with. So just to tell you guys, okay, in case you don't know, derivatives, it comes from the word derive. So the value of the futures contract or the values of any derivatives, it is derived from an underlying. All right, so in this case, okay, futures is a derivative. So the FKLI futures is the pricing is derived from our FBM KLCI, and the contract size is the FBM KLCI value times 50 ringgit, right? Times 50 ringgit, meaning that, okay, if the index were to go up by 1 point, that 1 point, the value is going to be 50 ringgit. All right, it's going to be 50 ringgit. So if you're still with me, type 50 in the chat box below. Okay, because later on, you're going to hear a lot of numbers. Okay, you're going to hear a lot of numbers. Okay, so if you're still with me, type 50 in the chat box below. All right. So participate, okay, along so that I know that you are still with me. You are not lost, okay? So next, the price fluctuation, meaning that what is the minimum bid, okay? Like the difference between buy and sell. What's the price fluctuation? The minimum is 0.5 index point. Now, in our usual KLCI index, it is normal to see price like 1500.1 or 1500.9. But in FKLI, you are not going to see that numbers. You're only going to see in a multiple of half point. So meaning that it's either 1500.0 or 1500.5 or 1501.0. All right, so it's only 0.5 at a time. All right, so trading hours basically is from 8:45 to 12:45 and then 2:30 to 5:15. So it opens before the market opens and it closes after the market closes. And then of course, lately we have this after hours, right? Only from Monday to Thursday. Okay, now, and the settlement is cash settlement. Okay, now you don't have to worry about that. Okay, so the most important thing that you need to know is 1 point. Okay, 1 point equals to 50 ringgit. That's it. So if the underlying were to go up, okay, by 1 point, and if you're at the right direction, okay, granted, you're at the right direction, then you make 50 bucks unrealized gain, put in this way. All right, unrealized gain, put in this way. And another thing that you might want to know is to execute or to maintain an FKLI position, one contract at a point of, okay, speaking, all right, in case somebody is watching the replay, okay, is 4,200. So meaning that you need to have a minimum of 4,200 in order to execute one contract of FKLI. Of course, I always suggest people to have more because, you know, if you really prepare like 4,200, if the position were to go against you, then you got margin call, especially when you hold overnight. All right. So that's the thing that you need to know. So minimum, okay, the contract required margin is 4,002. And usually I would encourage people to prepare like 6,000-7,000 for one contract just to be safe. All right. So next we talk about Fcpo. So the underlying is our crude palm oil. And the contract size is 25 metric ton. This one I don't have to care. What you need to know is for every time Fcpo move up by 1 point, okay, the value is 25 ringgit. Okay, so again, if let's say the Fcpo price is 6,000 and then you go long, meaning that you buy, and it goes up to 6,001, then you have a 25 ringgit of unrealized gain for every contract you go long. All right, the reverse is also true. Like if you go opposite, then you lose 25 ringgit per contract. Okay, so trading hours will be 10:30 to 12:30 and then 2:30 to 6 p.m. And then you have the after hours as well. So, and again, a physical delivery is the settlement. You don't have to worry about this, okay? Because you're not going to hold on the contract until it, call for a settlement. Now, another thing that is not in this slide is this. Because we are going to trade the outright, FKLI, just drop it down, okay, as a note, if this is the first time you trade BMD futures, trade the spot month. The spot month meaning that now is May 2022, then you're going to trade May 2022 contract. You trade the spot month. For Fcpo, you trade the third month. So you go to your broker's account, the third month, you have to trade that one. Okay. So that's the thing that you need to know. All right. So, and let's move on. So why should you consider futures trading? The first thing is leverage. Of course, futures, we have to talk about leverage because it is a leverage product. Okay. Basically, under the same umbrella of derivatives, every derivative is a leverage product. All right. So next is potentially profit from both direction. All right. So you can go long and go short. So if you think that the market is going to go up, you can go long. If you think the market is going to go down, you can go short. All right. So that's the thing about futures. Third is great liquidity, especially if you are dealing with FKLI and Fcpo in Malaysia. All right. So next is multiple orders type. So you have like market order, limit order, and stop order. Now I understand that, okay, right now a lot of stock brokers in Malaysia has already implemented like limit order and stop order or stop limit order, but they are not all of them, have implemented these kind of features, and they are really great to use. I mean, this type of order types. And for futures, it is kind of like a standard to have these orders type. All right, so you need to know how to use market order, limit order, and stop order. All right, so if you don't know, then you can ask your broker that they will be more than willing to share with you. But basically, market order is like to buy and then get executed at the whatever market price right now. So it's guaranteed execution, but price is not guaranteed. Limit order, I always want to think like a cheapskate kind of order. So if you're buying, if you're placing a limit order to buy limit order, it means that you want to buy cheaper. Okay, you want to buy cheaper, meaning that cheapskate. Okay, if you were to put a sell limit order, it means that you want to sell higher than the market price right now. So also okay, you want to make more money. Okay, so you want to sell at a higher price, so it becomes a queue. Okay, so this is a standard practice when it comes to stock market. Okay, so I want to buy cheaper. I key in a number and then to buy. That is a limit buy. And then if I want to sell, okay, the stock go up, then I want to sell at maybe I want to sell at like, let's say, five ringgit. Then I put a sell order at 5. So this is actually a limit sell order. So the default order in Malaysia stock market is limit. Okay. Now the next one is actually what we call stop order. So stop order is conditional order. So for example, if that thing were to, let's say FKLI right now is at 1500, all right, 1500. So let's say the market is about to go up, but from a technical perspective, you do not have a confirmation yet. So the confirmation will happen at maybe 1505. So what you can do is actually you place a stop order at 1505. So before the stock actually, before the futures, okay, the FKI actually go up and touch 1505, your order will be dormant. Your buy order will be dormant. So once it hit 1505, which is the stock price, or in certain broker that you're using, they call it a trigger price. Okay, so once a trigger price or stock price is being hit, then your order will be converted into a market order and it will be matched. It is a conditional order. All right, so sell, you just reverse the situation. All right, so the next thing is a lower transaction cost, but maybe it comes with a caveat, okay? Because in futures, you just pay the trading commission. You don't have like clearing fee lah, stamp duty lah, and all those things. It's very straightforward. Just a straight up, okay? One lot, you pay how much? Okay, one contract, you pay how much? Okay, and this one, you can ask from your broker. Of course, the more you trade, you can negotiate the broker fee. Okay, so next, let's talk about trading FKLI. So far, have you got an idea, okay, about FKLI and Fcpo? If yes, can you please type yes? Okay, meaning that type yes if you are ready to learn how can you trade FKLI. Okay, let me know in the comment section below. Okay, type yes if you are ready. You know, okay, what is FKLI, what to expect. All right, great. Okay, so trading FKLI. Okay, so FKLI is our FBM KLCI futures. So the underlying is FBM KLCI, which is the index that all Malaysia traders are very familiar with. All right, so there are a couple of ways you can start trading and looking into trading FKLI. Okay, and just to be very, very honest with you guys, personally, when the stock market is good, I personally, because I come from a stock trading background. So when stock market is good, when I have great stock picks, okay, when I have great stock picks, for example, it is obvious that like in 2020, tech stocks are strong, glove stocks are strong. Then I would go and trade those stocks. And then I wouldn't really focus much on FKLI. But when the market is dropping, you hit your stop loss or trailing stop on all the stocks and the market has minimal trading opportunities, then I will head over to FKLI, especially when I want to profit from the crash. All right. So just to be very honest with you. So again, learning how to trade futures is like increase your trading income. So instead of when the market is not good, you're going to do nothing. Okay. You can at least make a couple of like 100 from every single trade, something like that. Okay. Just to give you an idea how I actually treat it. Okay. So first, trade it just like any other instrument. Of course, you can trade it just like based on trend, support, resistance, and things like that. All right. So the pros is, of course, less noise. The cons is large stop loss. Okay. The cons is large stop loss. So let me see if I can give you an example. Okay. Okay, let me go to this. Okay, so this is a FKLI. So for example, if you want to trade, okay, like normal stocks, okay, like normal stocks. For example, this could be a support, and you want to trade a bounce off a support. Okay, now definitely, if okay, this is a resistance. Just example, okay, if you were to go long, okay, and your target is here and your stop loss is below the swing low, which is somewhere around here below the swing low, you will see that your stop loss is like maybe 10, 11 point. Okay, 10 to 11 point is still manageable, but there's going to be some situation whereby it is hard to follow daily chart. Okay, like for example, if you were to short right over here, okay, you were to short right over here, okay, this is maybe a little bit tougher because, okay, your stop loss, let's say you want to stop. Okay, let me give you an example on what I'm really talking about. Okay, so for example, it go up and come down. You want to short right over here, and your swing high is right over there. So if you were to go short, okay, let's say here, your stop loss is somewhere above there, and then you will see, okay, let's say the potential profit can be somewhere around here. Your stop loss is 34 points. Okay, so 34 points times 50 is a lot. Just like just now, okay, just now it's not 10 points, just to share with you. Just now it's not really 10 points. 10 points is just the margin that you have to give with. So for example, right now the market rebound a little bit. Rebound from this support. Okay, rebound from this sort of like support. You want to put the stop loss below the support. Again, maybe your target profit is somewhere around top over there. So it is definitely doable. Why? Because the potential reward is like, the risk reward is like 1 to 2. You can see that the potential risk to reward is 2.16, which is good. Anything more than 1.5 is, to me, is already good. Okay. Now the thing is, the stop loss is 28 points. Okay, the stop loss is 28 points. So just to pull out the calculator, 28 points times $50 per contract, your risk is 1,400. Okay, your risk is 1,400. So not a lot of people can swallow this kind of I would say potential risk for every single contract, because you might be thinking, okay, I'm going to put 5,000 or 6,000 per contract. If one stop loss is already going to cost me 1,004, it is not. It is a tough pill to swallow for a lot of people. But again, is it easier to trade? Now, to a certain extent, it can be, because it has less noise. But the cons, larger stop loss. Okay, so for Fcpo, definitely you can do that as well. But again, the stop loss is going to be way larger. So another thing is you can swing trade. So you can do some swing trade with hourly candle. So potential income is, of course, there, but you might need a little bit of monitoring. Okay, I believe, okay, if you are into futures, a little bit of monitoring is not going to bother you, right? It's not going to bother you. So I'm going to share with you how you can trade FKLI for short to midterm, or kind of like a swing trade. All right. So the required margin. Okay, the required margin right now is 4,002 per contract, just to let you know. And stop loss, you can put like 10 ticks. So a larger stop loss is acceptable based on chart. Okay, based on chart is acceptable. Okay. Now, first target is around 10 to 15 ticks. So meaning that you have 1 to 1.5 times of what you risk. You can still use trailing stop to secure higher potential profit. So if you come from a background whereby you know how to trend, okay, then you can also use trailing stop to secure higher profit. Okay, of course, you want to take partial on 1.5 R, you can also do that as well. All right, so just to let you know what does R mean. So if you risk 10 points and then you make 10 points, that one is 1 R, 1-to-1 risk reward. So if you risk 10 points and then your profit is 15 points, then your profit is 1.5 R, meaning that 1.5 times of what you have risked. All right. So first, what you need to do is you use daily chart to find potential setup, or at least to sort of like gauge whether or not it will continue to trend or it will reverse. Okay. Then you use 1 hour chart or even 15-minute charts to precise your entry and stop loss level. So let me just show you an example. Okay. So first thing what you need to do is you look for trend or potential reversal in the daily. So you can see that right over here, we identified a resistance, a very strong resistance, but it's rather like it's not a single level, but it's rather a zone. So it's like from 1,600 to 1,620. Okay, so the resistance zone is right around here. Okay, so what does this mean? It means that any turnaround from this level, any turnaround, any U-turn, okay, it is a potential shorting opportunity. But of course, right over here, you see, hey, macam no meat there, okay? Because it seems like this wave is big, but this wave is small. This wave is also small, but this wave is also small. This wave is big. You might be thinking, well, if I catch this trend, okay, only if I catch this trend, then you're gonna be profitable. Okay, you're gonna be profitable. How many of you think that? Okay, right now you look at this chart. Your first impression is only if I can catch this trend, this wave, okay, or this wave, then I'm profitable. If this is your first impression, can you please type me, M-E. So somebody asked, how do you manage price gap up or gap down? In FKLI, if you want to hold overnight, that's the risk that you have to bear. So you need to allow larger stop loss, but you can actually kind of like get some idea from the daily chart, the hourly chart later. All right, so again, resistance zone 1600 to 1620. Nobody expect only that. So you guys all expect short wave also can make money. Okay, cool. Okay, so this is the exact same line and then translate into hourly chart. So you can see that you can combine a lot of your technical analysis knowledge. Okay, so first thing, the trend was going up, and you know that 1600 to 1620 is a resistance zone. So here it starts to form a bearish crossover. Okay, a bearish crossover. Okay, so here it starts forming a bearish crossover, so you can prepare shorting. So once it's formed a bearish crossover, then you can see that it actually goes up, hit this resistance, and then starts coming back down. And then go up, hit this resistance, come back down again. All right, so you can start shorting here. When it turns down, put a stop loss up here. Okay, let me just draw it here. Okay, first one. It comes down, go up, come down. You can start shorting here, put a stop loss right over here. So after that, it goes up, it did not hit, then go down again. Okay, so if this wave you didn't manage to go short here, you can go short when it turns down again. Okay, so you have actually two opportunities here. Okay, so again, it's either down here when you hit some kind of what you call stop loss or trailing stop, or you wait until it goes down, then gap up, you close your position manually. Okay, because gap up is a sign of strength sometimes. Okay, so you close your position manually. And also, if you can see right over here is actually a small consolidation. All right, then it goes up. All right, so okay. So okay, here is a bearish EMA bearish crossover downtrend formation. So again, you have a double top. So you can, when FKLI move down after touching resistance, now resistance doesn't have to be like exactly touch that point, then you go short. Okay, it doesn't have to like exactly touch that, then you go down. Sometimes any reversal from that area, you can also do that, and then you plot your entry based on the waves. Okay, the waves means like this one is one wave. This one is another wave. All right. So no worries about the slide because I'll be demonstrating with you, okay, later with latest pricing. Okay, no worries on that. Okay, just to see the pattern first. All right. So again, you can go short here, or you can go short here. Okay, and of course, here is also another opportunity. Okay, you hit the second resistance up top and then go down, right? It's a second opportunity to go short. So of course, this wave is a lot more profitable, but of course, we don't expect these kind of things that happen every single day. We just catch short waves like this. You can also make some money. All right. So this one is a enlarged version. Okay, this one is the enlarged version. So it is right over here. Okay, right at this area. This is the enlarged version. So again, this line is the line just now. This is another line. Okay, this is another line for another double top. Okay, so This one is a crossover. Come down, go back up, come down, you short here. Okay, you short here. You short when it turns down from a resistance. You short here, take profit when it turn up and gap up. So you can see that your risk is about 6 points. Okay, your risk is about 6 points. This one is hourly chart. So risk is about 6 points. If you follow the trend all the way down until it gaps up, you close your position. Okay, this one you can see it gap up, but you did not close exactly at the gap, meaning that the market moved a few points higher than you close it. You still got 12.5, 12 points of profit. All right, so 12 points of profit. So again, risk reward wise is 1 to 2. So 6 points of stop loss times 50 is 300. So this kind of risk, 300 per contract is a little bit more acceptable for most people. It's easier to swallow. Okay, and then 12.5 pips, okay, ticks times 50 is 625. So if you have one contract, you make 625, okay, in a couple of days. All right, so again, I don't really calculate in dollar term a lot of time because to me, what's matter is risk reward. Okay, risk reward is more important in my opinion. Now, another thing that some of you might ask is this. Okay, if let's say, where's my cursor? Okay, let's say this one also go up, hit resistance, at least a resistance zone, then come down. But when it comes down, it gap down. Okay, should you go short? Okay, the answer is if you're ambitious enough, you can go short, but you have to quickly close your position. But I personally would not like it because if you go short right over here, your stop loss is at the top. So the stop loss would be a little bit bigger than usual. Okay, so I only take, quality setup. Okay, I only take quality setup. Now, okay, another thing that I can share with you is an indicator, a free indicator at TradingView is what we call super trend. All right, it's what I call super trend. So how can you use super trend? Is when you see green, okay, it means that it is more suitable to go long. And when you see red, it is more suitable to go short. Okay, it's more suitable to go short. Okay, now when let's say, okay, just now, if you see, this is exactly same chart as the before the enlarged one. Okay, so you see it goes down, go up, down, you did not short, never mind. It goes up and hit this level and go down. Super trend, the line also works as a resistance. So what you can see here is kind of like a congruent setup, a confluence setup. This area is your 1600 plus your super trend resistance. Okay, so when it turns down, you can go short. And then when the super trend turns green, you close your position. You can also make money. So just to share with you, super trend is one of the many indicators. Okay, I think it's one of the most useful indicators when it comes to, at least just to share with you, when I'm trading stocks. Okay, I want to see when does the momentum starts to shift. In a daily chart, it is very useful. Okay, if especially to those who trade stocks. Okay, but for futures, you can also use it to get some kind of like expectation. Okay, on how the trend is going. Like for example, if you look at the previous chart, this is an enlarged one. At this point, okay, it goes up, and come down. Okay, this one is a resistance. Some people might treat this as a resistance, but I wouldn't go short right over here because of two reasons. Okay, because of two reasons, I wouldn't go short because just like I said, hit resistance, turn down, then you can go short. But there are two reasons why I wouldn't do that. First, you see the moving average is still at the bullish side. So whatever moving average you use, like 10, 20, 30, 40, 50, 60, at this point of time, it will still be bullish. So when it is still bullish, I wouldn't go short. That's the first thing. Second, right over here, that's the point. Okay, that I circle. Okay, you see resistance, resistance, turn down. I wouldn't go short because super trend is still green color. So meaning that the bear has not arrived. All right, the bear has not arrived. All right, so is everything, so how many of you learned something so far? Okay, you learned something so far, type 1 in the chat box. All right, you combine all this, is going to be very powerful. Of course, you need to have a little bit of technical analysis knowledge beforehand, like resistance, okay, and moving average, crossover, turn up, turn down, which one is bearish, which one is bullish, you're going to know. But what is super trend? Super trend is an indicator. I cannot explain because it calculates the trend and the ATR, which is the volatility. Okay, so green bullish, red bearish. But of course, don't straight away go and long if you see green. Don't straight away go and go short if you see red. Okay. Also, okay, now when it comes to indicators, understand one thing is that, at least to me, I know that there are like leading indicators and lagging indicators. To me, all indicators are lagging because understand that indicators are a mathematical result of historical data. So to me, like some people say RSI is lagging, stochastic is leading. Yeah, maybe it's true, but they are all they are just a mathematical result of some historical data. So to me, they're all lagging. So what's more important to me is support resistance and also price action. Okay, support resistance and price action, and also the trend. Don't go overly obsessed with indicators because I've been there. Okay, every MACD golden cross I buy. Okay, every that cross I sell. Okay, I go Holland. Okay, so that's not good lah. Okay, that's not good. Okay, so just use it as something to sort of like give you extra confirmation. So you can see right over here, super trend turns red and is a like retracement downward from the what resistance. Then you can go short. Okay, stop loss at the top. Okay, stop loss at the top. Okay, so you can also see that stop loss is 15 point in this case. So you can see that 15 points is a little bit big, but okay, it's still under acceptable range, 10 to 15 points. But you just have to pre-agree with yourself. If stop loss we're going to hit, you're going to lose 15 points. All right. So where to find super trend? Good question. Okay, you go to trading view, even a free one you can use. Okay, go to indicator and then you search super trend. That's it. Okay, you can use the first one or this one. Okay, anything. All right, so just to give you a little bit of example. So you can see that, okay, because I prepared a slide way earlier on. Okay, so right over here, you can see that this is a support. Okay, this is support. So market might go up. Okay, might go up. You can see that it started testing here already. So that's why yesterday and the day before yesterday, all right, the market kind of like have a little bit of response. Okay, so when you know that the market is probably going to turn up from this point, then you can go into your hourly chart and start looking for trading opportunity. Okay, so start looking for trading opportunity. So I turn up, I turn on super trend. You can see that right now it has turned green, but it's a little bit too early to decide as well. It's a bit too early to decide. So probably I will wait a little bit more. So I will wait, it goes up, retrace back down to like maybe this EMA 50 right over here, then it rebound. At least you have a reference for your support. Now, the next thing that I want to share with you is if it were to go above this level, okay, go above this level, to those who know how to trade a breakout, you can trade a breakout as well. All right. because this is like a super resistance right over here. So again, this is something that you can trade as well. So when you move to your daily chart, you can see that, okay, this line is exactly at this, okay, resistance right over here, which is also your 20 days moving average. So if you can break above this, you might have at least a short rally. Okay, now a short rally is sometimes more than enough, okay, for you to make money with futures already. Because like 10 points, 15 points, okay, can make you some money already. But again, whether or not you like this trade, because my time is limited, okay, I can only share limited strategy. But this opens up an extra opportunity for you, okay, to trade the market, especially when the market is, you know, kind of like boring, no other things to trade, and also things along those lines. All right, so it gives you at least an opportunity to you know, trade. But you also realize that the risk sometimes is kind of like unknown. Okay, the risk is kind of unknown. Why? Because we are actually dealing with holding futures contract overnight. All right, holding futures contract overnight. So you need to be comfortable with this. If you're not comfortable with this, you can also go for trading. Okay, so if you're into day trading, okay, FKLI is good when there's a good uptrend or downtrend. So meaning that you have like many waves in the same direction. Okay, meaning that in your hourly chart, you have a higher high, higher low, higher high, higher low, higher high, higher low. It's not like messy chart like right now. It will be easier for you to not, you know, trade comfortably in the market. Okay, but it is rare for FKLI to move like more than 20 ticks per day. Okay, you seldom see our market move by 20 ticks a day. So even if you were to move 20 ticks a day, today trade, meaning that you're going to earn somewhere in between only. But it is normal for Fcpo to carry more than 50 ticks movement in a single day. All right. So I just want to know how many of you have traded Fcpo before, and how many of you haven't traded before. If yes, type yes. If no, type no. I just want to know. Okay, before I go into Fcpo. Okay, some say yes, some say no. So basically, Fcpo is famous for the daily volatility that it has, because this kind of daily volatility opens up an opportunity for day trading. So when you day trading, you ignore, okay, you conveniently ignore. Yeah, now the Fcpo movement is very crazy already. Okay, it's like 100 points, easily 100 points. Okay, and even more. Okay, last time 50 ticks, I would say, is like everyday thing. Okay, everyday thing. All right. So right now, of course, it's different already. Okay, it can be like 200, 300. Of course, because we are in a super bullish market for Fcpo. Right. So this is just to compare what you get and what you don't get in FKLI. Okay. So again, because of this kind of volatility, it opens up, okay, for us to do day trading, and we conveniently avoid one problem, which is gap. Because when you're doing day trading, you avoid the issue of gap. Right? Because a lot of people, when it comes to like Fcpo, a lot of people, they're afraid about gap. Okay. So like what I said, you conveniently avoid the problems of gap. So how can you get started with Fcpo day trading? All right. And what I'm going to share with you is strategies that I use. Okay. They are not 100% accurate, but they are the strategies that I use as far as trading Fcpo for day trading is concerned. Okay. Outright only. Okay. Trading outright Fcpo. Okay. So these are strategies that I use. Okay. It may or may not suit you. Okay. I would encourage you to learn and then do your back testing yourself and see whether or not you can handle this strategy. All right. So first, the required margin is 11,000 per contract right now. All right. And the stop loss is usually about 12 to 15 ticks for current market minimum. Sometimes certain setup can go up to like 15, 20 ticks. All right, but minimum is 12 to 15 ticks. And the first target point is 15. Second target is 25 to 30 ticks. Okay. As my background is a trend follower, I usually leave some contracts for trailing, meaning that if I trade 10 contracts, okay, then 5 contracts I will take profit at 1R. The rest, okay, maybe another half of it, okay, like 2-3 contracts, I'll settle at 2R. The rest I will trail. Okay, trail means I move up my stop loss, move up my stop loss, and move up my stop loss. Okay, so again, the first target profit 15, then 30. All right, so right now I would just say right off the bat, you use 15 is kind of like better. Okay, because it's very crazy right now. Okay, now you're gonna start slowly from 1 trade a day. Okay, the first opportunity will usually appear in the first half hour of trading, and I'm gonna share with you one strategy that I used. Okay, that would be the 10-35 strategy, because this strategy, okay, I will know the entry point by 10:35. Okay, by 10:35. All right, so if you are ready to learn, type 1035. Again, treat this as a sharing. Okay, you might need to adjust based on your very personal risk appetite and habit when it comes to trading this. Okay, so all right, so 10:35 is actually when the first 5-minute candle is closed. All right, when the first 5-minute candle is closed. So two main patterns to watch. The first is reversal. Okay, reversal. So reversal means the price touch back the opening price. Okay, and what you're gonna do is you go long at the opening price if the first 5-minute candle is a bearish candle. So meaning that when the market open, regardless the gap, okay, regardless the gap, I don't care about the gap. The first candle, I want to see what candle is that. So if the first candle is a bearish candle, meaning that it opens high, it goes lower for the first 5-minute candle. If it reverse back, okay, if it reverse back, okay, don't care about the gap is up or down first. Okay, if it reverse back, meaning that it goes up, I will go long at the opening price. I'll go long at the opening price. Short is the reverse. Okay, short is the reverse, meaning that if the first candle is a bullish candle, meaning that it opens and then go up, and then suddenly after the first 5-minute candle is done, it turns down. Okay, on the second candle, or third candle, or fourth candle, I will short at the opening price. Okay, I will short at the opening price. Now, the stop loss, you can put 15 ticks, no problem. But if the first candle is exceptionally long, okay, it's exceptionally long, you can either use 20 ticks or you don't trade. You find other opportunities. Okay. Now, the second strategy is momentum continuation, meaning that after the first 5-minute candle is closed, the second, okay, if it's a bullish candle, meaning it opens low, it go up, first 5-minute candle is green, the second candle is also going up, then you go long when it breaks the high of the first 5-minute candle. All right. If the first candle is a bearish candle, meaning that market open, it goes down, 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 down for the first candle. The second candle is also going down. Then you short below the low of the first candle. So it might sound a little bit complicated. Let me show you the example. So again, this is the first opening candle. Okay, opening candle. So the opening candle is a bullish candle, meaning that the market opens here, it go up. Of course, it goes down first, then go up, come down. Then after that, the markets reverse or continue trend. Reverse type R, continue trend type C. Okay. Do you think it reverse or continue? R or C? Because you need to know the pattern. Okay. Okay. It reverse. All right. So it reverse. So meaning that the first candle is going up, then it reverse. So what you do is you go short at the opening price. The opening price is 6166. So the second 5-minute candle is not being triggered because it did not go up enough to go long, and it also does not go down enough to go short. Okay, so the third candle, okay, would be the entry. So you go long or short. Go long or short. Participate along so that you remember better. Because if this is the first time you watch this strategy, okay, it's going to be very confusing for you. You're going to go short because it's a reversal. You short at opening. Okay, so you can see that it's very short. Huh? Stop loss 15 points. Okay, and then your profit 15 points. It's just happening at the next candle. No, the same candle. Okay, the same candle. So with this, if you want to practice this strategy, you need to know how to set what we call bracket order. Okay, you need to know how to set bracket order. So once you go short on that, okay, you automatically set a stop loss and maybe your first target profit. Okay, set bracket order. Okay, do you use the body or the wick of the candle? Now, listen carefully. The strategy is this. If it reverses, you go long or short at the opening price. Opening price. Okay, for this strategy, opening price. So it doesn't matter about the candle's shadow or tail or wick. All right, so all you need to know is if it reverses, your reference is opening price. All right, so stop loss 15 ticks, TP 30 ticks, then your risk reward is 1 to 2. 30 ticks is going to be the subsequent candle. Okay, it's going to be a subsequent candle. Now, the next one is momentum continuation. So the first 5-minute candle is this. The first 5-minute candle is this. Then it goes down. Okay, the low is 6078. Okay, and then you go short at 6077. Okay, you go short at 6077 and same thing. What you see here is 30 points. Okay, what you see here is 30 points. Stop loss 15 points. Risk reward 1 to 2. It just happened in like 1, 2, 3, 4, 5-minute candles. So it's like 20 minutes time. Your TP is already hit. Now, I also want to give you one example whereby you would get a little bit confused, like this one. Okay, like this one. Okay, this super long candle is the first candle. Okay, I think I'll just show you. Okay, just want to ask, how many of you kind of like get some idea on the strategy already? If you get some idea on the strategy, type 3. Type number 3. If you get some idea on the strategy already. So it's either reversal or trend continuation. Only these two possibilities. All right. So I want to give you this one. Okay. 20th of May. I want to explain about this. All right. So let me just show you this chart. I don't need indicator now. Okay. Not applicable for FKLI. Again, FKLI does not have such volatility for you to play around. Okay. Only Fcpo. Okay. So again, Fcpo is uptrend in a daily chart. Just to share with you, when the trend is going up, usually I'm more long bias, meaning that in a daily chart is uptrend, or at least it's not like hitting resistance coming back down on a normal situation, meaning that right now it's like sort of like on an impulsive wave. So during this period of time, I will usually be more aggressive when it comes to taking long positions in a day trading perspective. Now, being more aggressive doesn't mean that last time I trade 5 contracts, now I trade 20 contracts. No, doesn't mean that. It means that I will usually leave more contracts for higher TP. Okay, yeah, 5 minutes. 5 minutes as mentioned in my indicator in the chart in my slide just now. Maybe it's too fast I go through. It's 5 minutes, 5 minutes. All right, okay. So I want to show you 20th of this month. 20th. 20th. Okay. So as you can see, 10:30 is this candle. 10:30 is this candle. All right. So now prior to this is an opening candle. Do you think that this candle is a little bit longer than usual? Yes or no? The opening candle is a bit longer than usual. Actually, I don't have a definite answer. How long is long? How short is short? You kind of like play by your eye. It's definitely a little bit longer than usual. Okay, so when it's longer than usual, first either you don't trade or you use 20 ticks stop loss. Okay, now again, when you know that the first candle is a bearish candle, this one is no gap, but it's still the same. Okay, gap up a bit, then come down. Okay, so it's still the same. If it's a reversal, your entry, okay, meaning that it goes down and go up. If it is reversal, then your entry would be this. If it is a trend or momentum continuation, then your entry would be one tick below this. So again, when the first 5-minute candle is already formed, you already know the possible two entries. So if it goes above this, you go long. If it goes below this, you go short. But because this is an exceptionally longer candle, you need maybe 20 ticks of stop loss. So next candle, nothing happened. Next candle, you go long. Okay, you go long. Okay, yeah, this candle is definitely thick, but for trading, day trading, I would still use 20 ticks. Okay, so profit level, let's just put 40. Okay, stop loss, put 20. Okay, so okay, you can see stop loss is right below the low of this candle. Okay, so again, next candle, down, 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 down. Okay, then you see that it sort of like hit your stop loss and then boom, go up. Now, sometimes when the first candle is exceptionally long, okay, you got this kind of risk. But again, if you are watching the market, you're monitoring the market, if it goes up, then suddenly become weak already, I will exit partial position. And then when it goes up, I re-enter. But if you miss it, then you miss it. It's fine. Because, okay, let's back test this strategy a few days. Let's back test this strategy a few. I think I still got time. Okay. Today, this morning, 10:30. Okay. 10:30. 10:30. All right. So again, P&L, go short, short. Okay. 15 points. Okay. Okay. Wait. Where is the wick of the candle? Wait, because the screen is a little bit far away from me. All right. So this morning, okay, if you go short, it's going to be a losing trade. Okay, it's going to be a losing trade. So of course, after that, you still got opportunity, but I'm not going to talk about this. Okay, just talk about the 10:35 first. Okay, yesterday, 10:30. Okay, 10:30. So this one, basically it hit in just within 5 minutes. So this one, okay, now just to share with you guys, to day trade, personally, I use an external application called CQG. Anyone here use CQG? Can you please type me, M-E? Anyone use CQG? It is an external application. Okay, I'm not sure I'm pretty sure there are other brokers there are a lot of brokers that offered their own like third-party bridge program to do that. But For CQG, okay, that the thing that I use, once I know the entry already, I can press one button, just one button, it will automatically enter for me, either go long or short. Granted, I press the right button, okay? Enter for me, and then the stop loss is predetermined 15 ticks, and the first TP is predetermined 15 ticks. One press, I will be in the trade, and the stop loss and TP is set. And it's OCO, one cancel another. All right, so this one is a bit more advanced, but if you were into day trading, this one is a profitable one. Okay, this one is a profitable one. Click, okay, in just a couple of minutes, it's hit. All right, so you can see it all happens in one single candle. This one, it happens in, yeah, this candle. It goes down, go up, happen in one single candle. All right, one single candle, which is this one. And probably if you get started, probably that's the entry that you're gonna miss. Okay. Okay, now next 10:30. Okay, 10:30. This one. Okay, and then the candle wick go down, you might accidentally go short. Okay, you might accidentally go short. So if you happen to go short, you will hit your stop loss. But if you see a gap up, you accidentally go short, and then you go up again, you have to quickly flip it to the long side if you are alert enough. So this one, if you follow, you might also lose a bit money, or you're going to make a little bit money. So let's go to another 10:30, another day, another day, another day. Okay, this one, same thing. Okay, first candle, super long tail here, so you would probably go short here. Okay, go short. This one might actually also FFKU a little bit. I remember this one, I open and close one. Okay, for the first 15 minutes. Okay, so basically, this one also a little bit tough to catch. You need to be very alert when it comes. So this one is the one that I explained just now. This one, go long. Okay, this one is a huge trend to catch. Okay, so this one, 10:30 strategy, it works. Another 10:30. Okay, this one, again, 10:30, go short. This one is 2R profit. This one is the demonstration just now in the slide. All right, 10:30. This one, 10:30, I will skip it. Okay, you can see it super long going down. Go gap down, go up, then come down, go up again. So usually this type, I'll skip. Okay, meaning that there you can do nothing. All right, another one. Okay, this one, again, reversal. This one also at least 2R. Okay, so you can see 10:30. This one is also just now the example. Okay, because when I prepared the slide, I get the latest few days as example. All right, so this one, 10:30. This one is a bit draggy. Okay, so this one, when it hit, go up. Okay, you go short. This one is a short marginally. Okay, a short marginally. So here, 15 ticks. 15 ticks. Okay, a very short one. Do you have any idea how long? Okay, honestly speaking, day trading don't use trading view. Okay, you need to use your broker account. That's the fastest. Okay, that is the fastest because you need to be very alert. Okay, now I highly encourage you to go and back test the strategy, because when you back test a strategy, you will get an idea how fast your reaction will need to be. So again, this one, 10:30, it goes down. So again, this one is a trend continuation, momentum continuation pattern. This one is at least 2R. All right, so first 10-minute candle, 5-minute candle, then it goes down. You go short, then go down. And okay, this one, 10:30. Okay, first bullish candle, then reverse down. This one is also a good one. Okay, so again, you can see basically you go short here. Okay, how profitable you can right away tell from the chart. Okay, so stop loss 15 points, profit up to 30 points. Okay, up to 30 points. Where is another 10:30? 10:30. I'm looking for 10:30. All right. So, okay. Where's the 10:30? Okay, never mind. Another one. Okay, so this one, 10:30, go short. Okay, 10:30, go short. 1 hour, 1 to 2 hour, right over here. 1.5, somewhere there. All right. So you can go and back test yourself. This one also, go down. Okay. So this one is either you hit a stop loss or you hit a profit target first. Okay. So that one is very quick as well. And okay. This one is a huge reversal. This one is 10:30, then go up. Then one candle wick here will be like 20, 30 points. All right. So I think that would be all, okay, for my sharing sessions. Okay. That will be all for my sharing session. I'll let Shane to take over the time, and I want to know what questions you have because it's going to be very complicated, this one. All right, it's going to be very complicated.
All right.
Okay.
So thank you so much,
So,
Jin Hao.
yeah, I will let them to have a slightly longer Q&A because the more I talk, the more I feel that they are confused. Okay.
All right.
Yeah.
I think now is your time to shoot your questions at our speakers. So our speaker is ready to take on all your questions. Okay, so let your questions come. All right. So I guess you have also addressed questions along the way during the course of your presentation. So the first question is by Ang. For crossover, do you use 20 and 50-day EMA?
Yup. Yes, that's a standard one, just to give you an idea like how's the trend is doing.
Okay. So that we took that question already. So next is, may I know what is the super trend parameter?
Default. Okay, default parameter. So it's 10 and 3. Default parameter 10 and 3. That's the default one. Okay, so if you don't know what is 10 and 3, okay, basically 10, okay, is the period, okay, the ATR period, and 3 is the multiplier.
Okay, thank you so much, Jin Hao. Yes, any more questions for our speaker?
I think they're in confused mode. Okay. Never mind. While they are waiting, while waiting for them to give questions, right? So just let me share a little bit.
Sure.
For day trading, okay, I'm not saying that my strategy is the best. It is just that a strategy that, to me at least, it works for me. But of course, sometimes I have to react differently. But again, this strategy, because I already use it for many years, and when things happen like a little bit not right, I know how to reduce my positions and just to react to how the market is behaving, things like that. So you might need to do a little bit of fine tune. And just to share with you, as you can probably see just now, okay, sometimes the TP and SL happen in just one candle, and the candle that I was showing you just now is 5-minute candle. So you're going to imagine that things are going to move very, very, very fast. So apart from the first thing that you need to do is go back and do back testing. You test back the past 60 trading days, 2 months, okay? 60 trading days or 2 months or 100 trading days, and see whether or not you can handle it. Okay, whether or not you can handle it. The second thing is when you really go and do day trading, the next thing that you'll realize is you need to be very quick in responding. Okay, responding as in when 10:35 the candles is closed, 10:36 the second candle come out already. You need to know where's your entry, is where's your stop loss. So being able to place your order quick enough can be also one of the keys. And of course, if the 10:35 strategy you cannot follow, you can also use the FKI strategy I showed just now, like support resistance, to trade like afternoon sessions. Okay, like afternoon sessions. But what I would suggest is do not hold, not really overnight. Okay, not really overnight. If I don't have like at least 40 points or 50 points of unrealized gain, I wouldn't even hold to the afternoon session. All right, so the best and the longest one is actually from 2:30 to 6 for you to trade like how you trade FKLI. So that if there's a rebound or retrace from support resistance, you can trade. There is no problem. Okay, but granted, you close before the market close. All right, you close before market close because you don't know the gap sometimes can go against you very much. All right, so that is what I can share with you guys. And it's not easy. It's definitely not easy, but go ahead and see whether or not it works for you. All right. Okay. I see a question.
You see Bernie question, right?
I'm seeing Ang's question. I think I answered Ang's question just now. If I cut loss, when I re-enter, it must have valid setup. It must have valid setup. And yes, nowadays gap up and down or two reopen sessions. So that's why I say you close before the market close. Not the next day, not the final close at night. It's like before the afternoon break and before the evening break, you have to close it. Especially when you do not have enough unrealized gain to sort of like as a cushion, just in case that it gaps against you. Okay.
Okay.
Yeah.
Do you actually trade the evening hours until
really.
11:30?
Not really. I trade actually market open, that one is the most profitable one, the fastest and most profitable one, and sometimes also the most
Dangerous.
Most tech one. Because even if you use the best like apps or brokers, sometimes you still can miss like what misplacing order.
Okay. So so you usually trade the first hour, is it?
First, second hour, morning session.
Okay. Do you want to refer to Bernie question in the chat?
Okay,
afternoon gap. How do you anticipate the gap before closing?
How about the afternoon opening gap up or down? How can we anticipate the gap before noon? Actually, personally, I don't really anticipate the gap that way, because sometimes I know that like some people will try to guess where the gap would be and make the gapping money. But to me personally, I don't, because during that time, anything happen to the soy oil chart, because understand that soybean oil has a super long trading hour. Okay. And also like overnight gap. Okay. Remember that the Dalian palm oil, if anything happened that side, the gap will also, the price will be haywire when our market opens. So from my experience trading in the Fcpo market, at least for the outright, okay, I try not to guess the gap, because sometimes the result can be a little bit getting out of hand. So at least my style, I don't hold past the gap.
Okay. How about Jinwen questions for your stop loss? Do you just put a stop limit or stop market?
That's a great question. Okay. For entry, it's a stop market. Okay. For entry, it's a stop market. Okay. Or a market order. I have 4 templates in my CQG trading platform. Okay. So it's either market or stop market. Now, for stop loss, he asked about stop loss. Okay. So for entry is stop market or market. For stop loss is stop market. Okay. The normal stop, because I do not hold through what we call break hours or overnight. So that's why I don't use stop limit. Okay, if it's a stop loss, it hit.
So it's either stop or stop market lah.
Stop market, same thing.
Mm.
Yeah, same thing. For stop loss, it's
No stop
just
limit.
straight up the stop market. Okay, the stop. I don't use stop limit.
Okay. The next question is, where do we get 大连 futures chart? Yeah, it's from
Okay,
Alvin.
personally, I get it from a China's a China's software. Get it from a China software.
Okay, your broker didn't provide
No,
because they don't have this product.
because it's a China's futures.
Will TradingView has it?
I don't think so. It is like a product that not everyone can trade in. You can only refer to the chart.
So you have to go through a Chinese software
Yeah, and it's very finicky one. Very hard to use one.
Okay. Joe's Chan like to ask you why TradingView is not suitable for day trading. I thought there is a 1 minute chart as well.
Okay lah. There is a delay. That's the first thing. Second thing is you do not have enough time to react quick enough, especially if you're trading the opening. Just imagine, I'm looking at my broker's platform, okay, and with the software that I'm using, I can place order from the chart. I can still miss it. I can still miss it. So you don't have enough time to react. This one is from my experience. If you were to trade the market opening, if you use the strategy just now. So that's why it's a strategy that you need time to practice as well.
Okay, thanks for sharing your strategy.
TC Pro is worse.
Looks like Alvin has a lot of experience in using different brokers platform. Okay. Okay, the next question. For momentum trade, do you let your profit run more than 2R? And it went up more than 2R, do you place stop loss at 2R?
Yes. Okay, granted, in a daily chart, the direction is what we say is like congruent. So for example, let me give you an example. So for example, right now, Fcpo daily chart, it is more like over the bullish side. Okay, more like a bullish side. If the market were to, like, for example, tomorrow, it were to gap down a little bit, first candle is a bearish candle, then it has a reversal pattern, and then it's a strong reversal up, then it continue trend upward, then I will trail it up. If the direction is congruent with the daily chart, I will usually trail. But of course, at 1 to 1.5R, I will get ready to take a little bit, like 1-2 contracts first. And also, when it go up by 7 points, I will move my stop loss. Okay, 7 to 10 points, I'll move my stop loss to break even. Just to share with you guys, I'll move my stop loss to break even.
Okay. The next question is by Consin Chin. On your opinion, what is the best trading strategy, if any?
Okay. Hey, I didn't see the question.
Okay, because that's not on Zoom, but it's on YouTube.
Okay, no problem. If you were to ask me, best trading strategy, position trade.
Position trading,
But you're going to prepare like 20,000 to 30,000 per contract.
So you hold it overnight, am I right?
Overnight. That would be the most profitable, but you need to have strong heart. You need to have strong heart.
Okay. So that will be, you mean position trading in Fcpo, right?
Fcpo. But of course, you know, I position trade spread.
Okay. Which leads
it's a little bit more manageable, the one.
Yeah, which
but I
leads
do position trade the outright as well. But last time, when the required margin is still low, you can have like many contracts with a given budget. Now, because the margin requirement is like 11,000 already. So some more have to give like enough cushion for the stop loss and for the prices to move around. It's going to be very crazy. At least like 20,000 per contract to comfortably position trade.
Yeah, imagine if you have position trade FCPO long. Wow, I think now you could have made a lot of money.
But there's also like you need to roll over the contract because it's not an overnight thing.
Okay. Which leads me to my next question, since you talk about spread, right? So could you share with us, how do we do spread trading?
Okay, so for spread trading, okay, I assume you guys know what is spread trading. Then I will share with you my strategy. So for spread trading, I use the daily chart, okay, to get a trend direction. Okay, the major trend. And then I use hourly chart to get entry. And for spread, I will usually trade the third or fourth month away, and it's 1 month away. It's like right now, okay, you can trade like maybe July, August, or August, September. Okay, this kind of spread. So it will usually move a little bit in a more predictable way. The spread, the bid ask is not very high. Okay, so that would be my primary focus when it comes to spread trading. So again, daily chart, bullish, right now is bullish. Okay, and then you wait until a retracement in hourly chart. So whatever EMAs you're using, like 10, 20, 50, when it turns up, you couple with your MACD, your RSI, and whatever thing. If everything tells you it's bullish, you enter. Stop loss 15 pips. 15 pips ticks for now. 15, 20, depending on which pair you trade. Because right now, spread is also very crazy. Okay. So is the thing about spread is, of course, it requires less margin, but right now you have to check because the margin requirement is also different. They run by tiers already. They run by tiers.
Yeah. Right. All right. So do check out the margin before you start trading. The next questions by Alvin is, do you also trade Fcpo?
No.
So you don't do Fcpo, huh?
Fcpo, I think, is the best futures product in Malaysia. The best derivative product in Malaysia. If you want more you want something faster, you can day trade the outright. If you want to trade trend, position trade, you can trade spread. Because spread has minimal gap, even you hold overnight, compared to outright.
Yeah, spread has tend to have lower volatility.
Yup.
Okay, because it's a relative strength between this month and the other month. That's for calendar spread.
Yeah, ours is calendar spread anyway.
Yeah, but I heard that we'll be having a commodity spread soon. Okay, so stay tuned. Stay tuned where we'll give you more information. Okay, how you can do spread trading inter commodity. All right. So
that will be interesting to see.
Yeah. Jin Hao will brief you once it's launched. All right. The next question is, where can we get a spread daily chart? Yeah.
Okay, this one you have to rely on your broker because the trading view one is not accurate.
Okay.
Trading view is not accurate. This one you have to ask your broker. So talk to your broker and ask them, I want Fcpo calendar spread chart. Do you have it in your software? Because from what I know, not every brokers can provide that. Or I should say that not every spread chart that are provided by the brokers is usable. I think if that makes sense, because some at least in the PC one, the desktop version is usable. Yeah, but if you want it to be on the mobile, okay, then you have to ask your broker what are their offerings.
Okay. Which leads David to ask the next question. Okay, which brokers can I use? Because I've never traded FCPO or FKL before, not familiar with the brokers. Yeah.
You can
Actually,
answer this one.
I'm sure you're gonna throw back to me. Of course, we have to be impartial in this kind of session. So you can visit www.bursamarketplace.com and just click the futures broker. And then Bursa Malaysia will give you a list of the licensed futures broker that you can sign up an account with. Of course, that's when they will give the brokers your contact, and the brokers will contact you lah to open an account. And I think each broker has their own strength. So you can ask them about the fee, ask them about their trading platform. Then after you inquire about their services and the fee, then you decide which broker suit you better. Okay, because different brokers subscribe to different software as well. I think how you know it very well, right?
Yeah, I tried quite a number.
Yeah. So there are at least a broker you can try. Of course, maybe start with the one that you have already had an equity trading account. Ask your equity trading account broker, do they have futures, futures services, broking services? Okay, or ask your reminder. Okay, is he or she a dual license broker? And then you can only, you can also get his or her service lah. All right. So an equity broker may not be able to provide you futures broking if they don't have a futures broking license. Okay.
But they can always refer you to their maybe colleague or what.
Yeah, definitely. All right. So looks like the time is almost up. So thank you so much, Jin Hao. Let me hover back to my screen. Just give me a minute.
You can take over, right?
Yeah, I think just now someone told me that the link I give is a bit inaccurate. So I've just given you the right link. Okay. So this is Q&A session is over now. So thank you so much for participating. That we have an engaging session for Q&A. So now this is the good news for you, is that not only our session here is free of charge that you can attend for free, but we are also giving away cash prizes for our attendees today. So what you need to do to stand a chance to win these 30 ringgit cash prizes in the form of Touch and Go e-wallet reload pin is you need to answer our survey. All right. So 10 lucky respondents who answer all our survey questionnaires will walk away with Touch and Go e-wallet reload pin worth 30 ringgit. Okay, so we'll select 10% to give you the 30 ringgit Touch and Go e-wallet reload pin if you answer all our survey questionnaire. So where can you find a survey questionnaire? It's after we conclude this webinar, you exit this webinar, then the survey form will pop out on your screen. All you need to do is just fill up the survey form so we know the evaluation this session and how else we can improve, whether we have done a good job or not. So we will reach out to the lucky winners usually within 2 weeks to inform you whether you have won the Touch and Go e-wallet reload pin. All right. So please help us to complete the survey and you may be one of the 10 lucky respondents. All right. So next webinar, our next webinar is titled Cara Trade FCPO dengan modal serendah 1,500 ringgit. All right. So like the title suggests, it is going to be conducted in BM. So for those of you who are wondering, okay, can we trade FCPO with as low as 1,500 ringgit? Isn't the margin way higher than this? So tune in to our next webinar that will take place on 23rd of June. 2022 is a Thursday where we will talk about how do we trade FCPO with just as low as 1,500 ringgit. All right. So it's 23rd of June, 8:30 to 10 o'clock. I've just given you the registration link. All right. Again, for you to register for the session. All right. So yes, that will be my last slide. So thank you everybody for tuning into this session, level up your trading portfolio with BMD futures. So hope that today you learn how should you go about approaching FKLI and how should you go about trading Fcpo. Okay, so you have learned two different strategies from Jin Hao on how you can trade these two different contracts. So hope you all go back and practice and see whether will this strategy work well for you as well. All right. So yes, if you want to stand a chance to win the 30 ringgit, please answer our survey questionnaire. With that, thank you everybody for tuning into this session. So thank you, Jin Hao, for sharing your strategy with us. So hope all of you here have gained enormous value. So may you have a great rest of the day. Bye, everybody.
Bye, everyone. Thanks for joining.